Do you live in Canada and want to know how to invest? If so, you found the perfect video. Hey, I'm Britt Williams Baker, co-founder of Dow Janes, and in this video, I'm going to show you exactly how you can invest if you live in Canada. So the way I'm going to show you is through the Vanguard platform because they offer some pretty low cost, low fee options for investing. But the way that you're going to invest is likely through a different brokerage. So that's what we're going to start with. So if you go to vanguard.ca, you'll be on the Vanguard Canada website. And if you click how to buy, this will just show you some of your options for where you can open an account. So if you scroll down to online brokerage account, these are some examples of online brokerages. You may have a bank account at one of these already, in which case you'll just need to open a brokerage account as well. So these are some of the examples of where you'd start. And when it comes to investing, you have to have an account before you can invest. So this is definitely the first step. All right, so then once you have an account, you put money into it, and then you have a decision of what are you going to buy with that money. And that's what I'm going to show you right now as some of your options. So to look at the options, we're going to go to products and then all products. And this site allows you to filter by product type, management style, and asset class. And so I'm going to start with the simplest way to invest, and then we can get a little bit more complicated depending on your desires. So the simplest way to invest is through this awesome thing called asset allocation funds. So I'm going to click asset allocation and just show you what these are. So these are they're portfolios, they're ETFs. So ETFs are exchange traded funds. They're usually the lowest cost way to get invested in a broad portfolio. So each of these asset allocation ETFs is based on, has a different, it has a different asset allocation, surprise, surprise. And what that means is it has a different mix of stocks and bonds. So we'll look through each of them to show you exactly what's in it, but first I'll just show you what we're looking at here. So this is the ticker symbol. This is the 3 or 4 letter symbol that tells you exactly what ETF you're investing in. So these are unique to each ETF. You can know that if you invest in VCNS, you are investing in the conservative ETF portfolio from Vanguard. So these are unique ticker symbols. And then over here, these are the historical performance. So 1 year, 3 year, 5 year if they have it, and then since inception. And the other important pieces here are the management fee and the fact sheet. So the management fee is the fee that you're charged for investing in these portfolios. So these will range, usually in Canada, they're slightly higher than they are in the US because these are kind of made for you portfolios. And these, anything below 0.3% is pretty good. You don't need to worry about the fee if it's anywhere below that. But the lower the fee, the less money you're paying to invest in that fund. So I'll show you how this differs from just a standard ETF rather than an asset allocation ETF. So these are all 0.2. And then the fact sheet will show you exactly what is in this portfolio. So there's 2 ways you can dig into the information. You can either click here or you can click here. So I'll show you, if you click the name, what we're looking at first. This has basically everything you need to know about it, and then you can also get to the fact sheet right here as well. The fact sheet has basically just much more detail about what is in the portfolio. And we'll just wait for this to load, and I'll show you. This is the piece that you want to look at. Here we go, back down to asset allocation. So this shows you what percentage of this fund, of the conservative ETF portfolio, is in stocks versus bonds. So this one has 40% stocks, 60% bonds, which is a more conservative portfolio. So it is adequately named. This would be if you were actually getting pretty close to retirement. This would be the type of portfolio that you might want. If you're more like 30 and investing for retirement and you have a much longer time horizon, you would want something more closer to 80% bonds, or sorry, 80% stocks, 20% bonds. So kind of flipping this and even more stocks than what we're seeing here. We talk about this in a lot of our other videos, but just to teach you in this moment, in this teachable moment, stocks have higher returns, higher risk and higher returns. And so if you have a longer time horizon, like 30 years until you need the money, you want to take advantage of the returns that you can get from stocks versus bonds are lower return, lower risk, and those are more for balancing out your portfolio as you're getting closer to needing to withdraw that money. So stocks are investing in companies and publicly traded companies. Bonds are investing in basically IOUs with either the government or businesses. So they're safer, but lower returns. All right, that was a quick tangent. So I'm going to go back to the asset allocation portfolios just to show you your options. So if you were younger and looking for a higher portfolio of stocks, you might look at the growth ETF or the all equity ETF. So just to show you what the growth ETF allocation is, if you scroll down, you'll see, oh, it's going to make me scroll down again, isn't it? Come on. Here we go. You can do it. All right, asset allocation of the growth portfolio is just what we talked about, 80% stocks, 20% bonds. So this is great if you are younger and want to have bonds in your portfolio. There are some people who don't want bonds in their portfolio at all. They say, I want my portfolio to grow as much as possible. I'm young, I have I don't need this money for a long time, and I would rather be 100% in stocks. If that is the case, then you would want to look at the all equity ETF portfolio, which gives you 100% stocks. Well, it should, because it says all equity, but we'll just double check their allocation as we scroll down to asset allocation. Here we go. Yeah, nearly 100% stocks. Now, if you'd like more information about what is in this ETF, you can just keep scrolling down. So you'll see the number of stocks. You'll see the allocation to the different funds. So you'll see that this all equity ETF portfolio is simply made up of 4 other ETFs. So it has 43% in the US total stock market index ETF, the Canada all cap index, developed all cap X North America index ETF, and the emerging markets all cap index ETF. So you could create this portfolio on your own by buying these 4 ETFs instead. That is absolutely an option, and then you would have more control over the actual allocation that you want in your fund. Say you wanted slightly more emerging markets, you could just change this allocation. But when you buy VEQT, this stock ticker, this is what you're getting, is this mix of funds. And then this shows you the, so market capitalization is essentially the size of the business. And so this is mostly large cap businesses, as you'll see in a moment when we look at the specific holdings, and a small amount of small cap. And then this shows you the market allocation, so where the geography of most of the businesses. So mostly we're looking at US and Canada. Weighted exposure by industry, so heavily in financials and technology, as well as industrials and consumer, discretionary. And then holding details. So this shows you exactly what companies you're invested in by choosing this portfolio. So you can see these are your top 10 holdings. You have a mix of American and Canadian businesses mostly. And then you know exactly what you're investing in. So what we just looked through, you can do that for any of the portfolios by just continuing to scroll down once you click into that portfolio. So we're going to go back and look at, again, so these are the asset allocation funds, and they vary depending on what your intentions are, what you want your asset allocation to be. These are great kind of like one-stop shop options. If you just want to invest in one thing and be done, this is a great option. Now, if you want to kind of play around or create your own portfolio, then you would look at most likely ETFs. So we'll look at that next. So we'll turn this filter off and we'll turn the ETF filter on. And then you will see that all the various ETFs. So you might recognize some of these from what we were just looking at, like the US Total Market Index ETF, Canada All Cap Index ETF, S&P 500 Index. This just means it tracks the S&P 500 index. So these are ways that you could create more of a specific portfolio based on what you are interested in. And if you wanted to, heavily weight more developed countries or emerging markets, you could do that by choosing your own ETFs. Again, you want to pay attention to this. Whoops, sorry if I'm making you dizzy. You want to pay attention to the management fee over here to see what you're being charged, and then you may want to look into it and see what it is actually invested in. So this would be how you create more of your own portfolio. But again, an asset allocation portfolio is a great option if you just want a super easy way to just get started. All right, I think that's everything I wanted to share with you about how to invest in Canada. Again, don't forget, you would need to have a different account at one of these online brokerages. And then, so once you have these online brokerages, and once you then know what ticker symbol you want to invest in, say you want to invest in the all equity ETF portfolio, you would just search for VEQT at your online brokerage and then buy it. And it's as simple as that. And then you're invested. All right, hope that was helpful for all our Canadians out there. If you're looking for more information, check us out at dowjanes.com. We have incredible one-on-one coaching and group coaching programs available to really hold your hand through the process of saving, investing, and growing your money. All right, that's all for today. Look forward to seeing you in the next video.